School doesn't teach you to be rich. School teaches you to be an employee. If you want to be rich, you have to understand money. If you want to be an employee, you have to know how to work. The problem is when you spend all your time working, you'll never have any time left over to make any money. Let me explain what I mean. If you think of some of the wealthiest people in the world today, they didn't just get there by working and getting a paycheck for the hours that they work. They did something different. They took a risk. And this is one of the concepts that school never teaches us, but it is the backbone of building wealth in this country, and I had to learn this the hard way. It is the backbone of how you can become successful in this economic system. We live in a capitalist system. You can hate it, you can love it. The reality is, this is what the system is. I wish my teachers or somebody would have told this to me and explained this to me instead of saying that the capitalist system is the greatest system in the world or saying that it's the worst thing in the world. Like, that doesn't do any good. Explain how it works. That way you understand how the system works. That way you understand how you can win in a capitalist system. In a capitalist system, the risk takers who win get rewarded. Let me explain that, because I'm a football guy. When you play football, you don't get an abnormal amount of benefit for an abnormal amount of risk. What does that mean? If you have the football and you're throwing Hail Marys all the time, well, the most amount of points that you can make if you get a touchdown is 6. If you throw a Hail Mary, you get a touchdown, you get 6 points. If you do another Hail Mary, you get a touchdown, you get 6 points. There's no difference between doing a Hail Mary and getting a touchdown and doing a bunch of slow running games, a bunch of slow and short passes, and working your way down the field. There's no difference. It's 6 points if you get a running touchdown. It's 6 points if you get a Hail Mary touchdown. In this capitalist system, the one that America is in right now, that's not how it works. If you take a big risk, there's no limit to how much you can make. You can 1x, 2x, 100x, a millionx your money and your return, meaning there's no limit to how much money you can make, and the more risk you take, the more calculated risk you take, the more money that you can make. But if you don't take any risk, you never have the opportunity to get any of that upside. So why do some people become insanely wealthy? Well, most people don't. It's because some people understood how the system works, they took that risk, and they were able to win in that risk. Now, of course, some people get this money handed to them, some people get this money passed down to them, some people win the lottery. I'm not talking about those people. Those are the outliers, they're not the rule. When you go to your job, when you go to work, you're guaranteed a paycheck. If you go to work, you put in the time, you put in the hours, you will get paid a check. There's no risk there. There's a little bit of risk that your company could go bankrupt, your company could go under, and maybe they can't make a payroll or maybe 2 payrolls, but your risk is very minimal. The biggest that you can lose is that you can lose your job. But now when you are the business owner, if you're starting a business, the risk is very different, because maybe you have a product where you need to sell a widget. You got to sell something, and it takes you 3 employees in order to build this business. One person's got to make it, one person's got to market it, and one person's got to handle all of your fulfillment and inventory. You have 3 people that are needed in order to build a business, and each person costs $50,000 a year in salary. Now you have to front the salary in order to do that, or you have to find a way in order to fund that. So you got to pay $50,000 to employee 1, $50,000 to employee 2, $50,000 to employee 3, and now you have to hope that you can make enough money to pay the employees. Maybe for the first 6 months you're not making enough money. Maybe you have to pay out of your own pocket. Maybe you have to go and get a loan. Maybe you have to go and raise money from investors and take that risk in order to be able to pay these employees. But then maybe 6 months go by and then you start to break even. You haven't made $1 yet, but your employees who are coming to work every single day are getting paid. They're coming into work and they're putting in the hours and they're getting paid. They're taking a risk that they're hoping that their company doesn't go under, but your risk is now you have a loan that you're personally liable for. So if you don't pay the money back, they might take your car away from you, or they might take other things away from you. You have investors that are relying on you, and so if you don't pay them back, they're going to be upset. They might come after some other stuff depending on what your arrangement with the investor is, or you invested your own money. And so if you don't make your money back, well, that's your own money that's lost. You just lost $150,000 because you had to pay these 3 employees for the year. But maybe month 6 happens and now you start to break even. Now you can make your debt payments, you can make your investment payments, and you're able to pay the employees. You're still not making any money, but your employees are making money. Now another 12 months go by, and now you're not making $50,000 a year, you're not making $100,000 a year, but you're making $5 million a year. And let's assume that your costs have not gone up. You still have the same 3 employees as before. Each of these employees are making $50,000 a year, but now you're making $5 million a year as a company. Yeah, you might want to reward your employees. You might want to give them a raise. Maybe you give them a profit share bonus. Maybe you give them some sort of revenue share bonus. That's up to you. But all that other upside, all those other millions of dollars are now yours because you were the one that took the risk to start this business idea. In this economic system, if you take the risk, you get the reward. Now, maybe you don't like that. Maybe you get angry and you want to fight about it. But this is where you got to understand. Do you want to be right? Or do you want to be rich? If you want to be right and you want to argue about it, that's fine. That's completely up to you. It's a free country. Or you can understand it and you can work to be rich and learn how the system works. Because the reality is this is how the system works. It's happening around us right now. But you got to also understand that this risk and reward can also work in the opposite direction. Let's assume that now instead of starting a business where you're selling a product, you're investing in real estate. And so now you're working to buy rental properties and you built up a portfolio and things are going well because property prices are going up, rental prices are going up. You're making so much money, things are going great. But then something like 2008 happens, where now home prices are going down, tenants can't pay. Well, a tenant doesn't have that much risk. They're in a contract to pay their lease, but the most that they can lose is whatever's in that contract, and usually they can walk away and just lose their security deposit. So you really don't have that much at risk when you're a tenant. But you as the landlord, as the investor, as the owner, now you're taking on all the risk. And so if your tenant leaves and property prices fall, now maybe you go underwater on your properties and you can't refinance. And if you can't find another tenant who's willing to pay, now you're stuck. Maybe you have to cut your rent prices. Now, if you cut your rent prices, maybe you lose out on all of your profits. Maybe you were relying on your real estate business in order to pay for your lifestyle, but now you have no income coming in because all of your money is going to pay off all your expenses. And if the economy continues to go down, and now you have this real estate business that you're relying on, and now tenants aren't paying. Tenants are damaging your property because they're angry, they're upset with what's going on in the economy, they damage your property, and now you have these broken properties, and you have to keep lowering your rents that now you're not making money. In fact, you're not even making enough money to make your payments. You can't even pay your contractors, and now you're underwater, and you have no money coming in anymore to pay for your lifestyle because now your real estate was funding your life. Now, not only do you not have money to pay for your lifestyle, to pay for your expenses, but you don't have money to pay back your mortgage lender for all of your properties, and that's when they come in and they foreclose on you. Now, your credit score is getting hit. The bank might put a multi-million-dollar lien on you. The contractors might be suing you for this back money that you owe them, and now you're dealing with all the stress while you have no money coming in, and now you have to go and figure it out. So you have risk, which is now you investing in real estate. You have the risk of the downside. It's the same thing in business. It doesn't matter when you have risk. You have risk of the downside. But the benefit is when things work in the upside, you get to reap the rewards of that. This is how the system works. The nice thing about being alive in this day and age is that you can take advantage of a lot of the upside without taking on all of the downside risk. How? Well, there are so many different investment platforms out there right now which will let you invest your money without worrying about having to lose your home or lose your car. That you can invest your money in the stock market and now your risks are limited. Where now the most you can lose is the money that you invest. And investing in the stock market is very accessible today, where 10, 20, 30, 40, 50 years ago, it wasn't so accessible. Because now if you want to invest in the stock market, there are so many free brokerages out there that you can open up on your phone. Back 10 years ago, there were no free brokerages out there. You had to pay a commission, so it was much harder to do that. Now you can start investing with $1. Same with real estate. There are crowdfunding platforms that will let you invest in real estate, get exposure to real estate with as little as $1,000 or $100, some even $10 nowadays. Now the nice thing is you get to get some of the upside, where now you can get some dividends, you can get some appreciation, but the most that you can lose is the amount of money that you have to put in, and you don't have to deal with any of the headaches. When a tenant destroys your property, when someone sues the real estate owner, you're not the one dealing with that, you're just investing your cash. You can also invest in startups now, where now you can invest in companies that you like, that are innovative, for less than $100. There are so many crowdfunding platforms out there right now. One of them is Republic, one of them is Start Engine, one of them is WeFunder. I'm not paid by any of these companies. These are just some of the platforms out there that allow you to invest in startups. Yes, it's very risky because most startups will fail, but you also have the potential for a lot of return. So this is that abnormal return versus risk benefit that you can understand, where in this system, the risk takers are the ones that are benefited. We are never taught this, but this is the reality of how the system works. This is what's happening around us right now. And you can either spend your efforts trying to be right, fighting the system, or you can get rich, understanding the system, and then taking better care of yourself your family, and your community. This all comes back to the whole concept of equity, which I'm going to talk about in just a second. But if you do want to learn more about how you can invest your money, even if you don't have a ton of money, and start generating passive income, I put together with my team a free guide on how to start generating passive income, which will break down different passive income generating strategies, how you can start investing your money, even if you don't have a ton of money, so you can start generating some income. If you want to read this guide, it's completely free, and I'll put that link for you down in the description below. But this is where we come back to the whole concept of equity, which is how wealth is built in America. In America, wealth is built not through your salary, but through equity. In this capitalist society, there are two ways that you can earn money. You can earn money from your labor, or you can earn money from your capital. Your labor is your salary. This is your paycheck. You're going to work, you get paid. Very little risk. On the other side, with your capital, this is much riskier. You're investing your own money. Either you're building equity or you're buying equity. Building equity is going out and starting to invest in real estate yourself, is going out and building a business. This is the most risky, but also has some of the biggest returns. On the flip side, instead of building the equity, you can just buy the equity. This is investing your money. This is investing your money into stocks, investing your money into the real estate crowdfunding platforms, investing your money into the startups, because now your risk is so much less. The most that you can lose is how much money you put in. There's no limit to how much money you can make, but you're going to be limited in the sense that if you went out and actually built the equity yourself, if you were building the company, if you were the one that was actually owning the real estate, you would get more upside. But there's still no limit to how much you can earn, because if you invest in a company on the stock market and they're tenfold, no one's stopping you from getting those gains. And this is where you want to be able to understand the system and how the system works. That way you can use the system for your advantage. See, we're taught to go to school, to get a degree, to get a job. And when you go to school to get a degree, to get a job, you're getting a salary. And that's nice as a way to start earning a paycheck, but a salary is never going to make you wealthy. Wealth is not built through your salary. Wealth is built through equity. So what we should really be taught is go to school if you want to get a job, fine, but working to build equity. The whole system revolves around building wealth through equity. So what we should be learning is, okay, here's a class on how do you become wealthy. It's through building equity. How do you build equity? You can buy it, you can build it. And the whole system is revolved around building this type of equity, and that's where real wealth is built. The last thing that I want to mention about this is the whole idea of getting rich quick, because there's this whole movement or industry on the internet where people show off, I'm 25 years old, I'm 35 years old, and I have millions and millions of dollars, and it was so easy. I did it in 6 months. The reality is for 99.9% of us, it's not that easy. It takes a ton of work. We don't get rich parents who are just going to give us millions of dollars. We don't win the lottery. We don't find this magic idea that's going to magically make us millions of dollars in 6 months. For the majority of people, the way that real wealth is built, I'm talking about real sustainable wealth, not some accidental, I've thrown my money into a meme stock and I turn into a millionaire overnight. The real sustainable long-term wealth is built through long-term investing for regular people. Not everybody is meant to be an entrepreneur. Okay, entrepreneurship is hard. It is very difficult. It takes a lot of stress. It takes a whole lot of different types of way of thinking. Not everybody's meant to be a real estate investor. It's got its own headaches. It's got its own stuff. And so if you're not meant to be a real estate investor, that's okay. If you're not meant to be an entrepreneur, that's okay. You can still be a business owner without actually running and operating the business. How? By owning it through your capital. Taking some of the income that you're making and instead of spending it all, putting it to work. Investing this money, whether it's into the stock market, whether it's into real estate funds, whether it's into actual real estate, whether it's into startups, whether it's into cryptocurrency, whether it's into whatever type of investment that you believe in, that you understand, where now you can put your money to work. That way you can build wealth. But if you want to really build wealth over the long term, for the majority of people, time has told us this, that the way it's done is through slow, long-term investing. Constantly investing a piece of your paycheck every time you get paid, and slowly doing this week after week, month after month, year after year, letting your money grow, letting your money compound, and letting your money build you wealth over long term. Because if you do this for long enough, you will be able to become very, very, very successful. But it requires you just to get started, and it does not matter how much money you're starting with, whether it's $100,000, $1,000, or $1. You need to get started, and then you got to keep learning. Keep investing in your own education. And thanks to YouTube, it's completely free to start doing that. And so then you can start learning from YouTube, then you can start reading books, and then maybe you can start taking classes if you find a class that's going to help you excel at whatever it is that you want to learn more about. But this is where you have to understand how the system works. That way you can capitalize on the system, but it requires you to actually understand the system instead of just complaining about it and hating the system. Hate, this is the way that some of these businesses work. Versus in the stock market, you can build a stream of income. It's not going to be as big as owning your own business, but you can build a passive stream of income. And if you do this over time, you can build a stream of income that will help fund you, your lifestyle, and it's a stream of income that you can potentially pass down to somebody else. Let me give you a couple examples. I'm not telling you what to invest in, just giving you a couple examples of how it works. The Verizon company today, VZ, that's their ticker symbol, they pay out a